Chamath Palihapitiya just called copper the asset set to go absolutely parabolic for 2026. Gold just hit $4,700. Silver is up 140% since 2023. Tokenized metals just crossed $4 billion in market cap. But here's the framing that made it all click for me. Matt Hougan, Bitwise's CIO, just said something that every crypto native needs to hear.
So silver is Solana to Bitcoin's gold.
Let that sink in. We're watching altcoin season in metals. Metals are coming on-chain, with Remora launching 5 new metals available directly in your Solana wallet. Let's talk about why metals are pumping so hard, and stick around to the end to see whether the same setup is underway in our coins. So the gold market fundamentally changed in 2022. The US broke the gold market, and you can't blame Trump for this one. This was actually under President Biden. When Russia invaded Ukraine, the US weaponized treasuries and seized Russian assets. It drained their funds, but the war kept going. This action fundamentally shifted the role of the US dollar as the reserve currency. Now, the dollar is still the reserve currency, but as tensions rise, central banks are buying more gold instead of currencies. Treasuries are still being bought, with over $600 billion in the past year alone. Even China is likely still buying through custodians like Euroclear in Belgium. But this single event escalated central bank gold purchases from 400 tons per year to 1,000 tons per year. Before 2022, it was about 400 tons annually. In 2022, it jumped to 1,000 tons. 2023, it maintained that 1,000 tons purchased. 2024, still 1,000 tons. 2025, the trend continues. Now, let's take a look at the price action. In 2022, gold went up 2%. In 2023, central bank buying maintained. Gold started climbing. In 2024, the same buying pressure was there, the price still climbing. In 2025, we saw 60% plus gains, with over 50 new all-time highs. Slowly, and then all at once. The underlying market structure had changed, with massive institutional buyers. Price didn't reflect it immediately. Eventually, the sellers ran out of ammo, and price went parabolic. Does this sound familiar to you? This is exactly what happened with Bitcoin in the ETFs. Institutions started accumulating in 2024. Price went up a little bit. Then all at once, it went insane, the same exact pattern. This is literally the Bitcoin ETF playbook. When ETFs launched in 2024, the institutions began accumulating. Eventually, the sellers ran out of ammo. Price goes parabolic. Gold did exactly this, 60% plus gains in 2025. Matt Hougan compared the current metals rally to crypto market cycles, where gold leads like Bitcoin, then money rotates down the risk curve. His take on silver? Silver is Solana to Bitcoin's gold.
So let me start with gold because I think it paints a picture for Bitcoin. And then silver is, the translation is it's altcoin season in metals. We had the king rally in Bitcoin, and now people are moving down the metals, and eventually they'll get to like rhodium. So silver is Solana to Bitcoin's gold.
This is altcoin season in metals. Gold led, now silver is ripping 140% since 2023. Copper is next. Chamath on the All In podcast made the case for copper as his best asset pick for 2026.
We are still completely underestimating how short we are in terms of the global demand supply dynamics. The asset that is set up to go absolutely parabolic is copper.
Copper isn't just another metal. Data centers require up to 50,000 metric tons per facility. It's in chips, weapon systems, EVs, and grid infrastructure. The Trump administration reclassified it as a critical pillar of national security and slapped 50% tariffs on imports. If gold is Bitcoin and silver is Solana, copper is the sole ecosystem play. It's the infrastructure layer everything else runs on. Tokenized commodities crossed $4 billion in market cap, with Tether Gold, Pax Gold, and others seeing record inflows. But the vast majority is on Ethereum, sitting idle, barely composable, expensive to move. Meanwhile, Solana is eating the RWA market with $1.15 billion in RWA value, an all-time high, 126,000 plus distinct RWA holders, 325% growth in 2025, over 95% of tokenized stock trading volume across all chains. That's right, Solana captured 95% of tokenized equity trading volume, not Ethereum, Solana. Remora Markets crossed $62 million in trading volume, and they recently added 5 metals to be traded directly on Solana. DeFi protocols are quick to integrate these and are offering amazing utility to them. It's no wonder why we are seeing this surge. Real DeFi utility for real-world assets. Now the infrastructure is ready. The liquidity is there. Now apply that playbook to metals right as we enter alt metal season, and you can participate on Solana. What metals on-chain actually unlocks is global access. Someone in Argentina, Nigeria, or Indonesia can hold copper exposure without a brokerage, without fidelity, without T+2 settlement. They just buy it with 24/7 trading. Stock markets close. Commodity exchanges have hours. Trade tokenized silver at 3 a.m. on a Sunday if you want. DeFi composability. I see a future where we use tokenized copper as collateral on Camino, earn yield on gold through loop scale, or even borrow stables against metals to buy a crypto dip. Hedge against crypto volatility. Gold and silver have negative correlation to risk assets during stress, with centuries of data to back this up. If you understand altcoin rotations, you understand why silver and copper are pumping. Same energy, different asset class. So if Matt Hougan is right, and this is alt metal season, here is what that means for us in crypto. The same pattern could play out. Institutional accumulation is happening. We just haven't seen the Bahamas breakout yet. We're watching the exact same pattern we've seen in crypto play out in metals. Institutional accumulation. Sellers exhausted parabolic moves, and now alt season. Gold is Bitcoin, silver is Solana, copper is the infrastructure play. Tokenized precious metals grew 67.8% in 2025, reaching $1.9 billion. Still, under 1% of stablecoins, Goldman sees gold at $5,000. Chamath is calling copper parabolic. For the first time, crypto has the rails to capture this demand. No brokers, no 9-to-5 market hours, no geographic restrictions. Tokenized real-world assets trading 24/7, composable with DeFi. If this pattern holds, the institutional accumulation happening in crypto could play out the same way. We just haven't seen the breakout yet. Metals are up only. Now you can own them on-chain, and we can simply hope that the same playbook happens for our coins with the institutional wave that we're seeing.